if you're fixed for 7 years and then the index has to be, or the rate has to be adjusted in year 8 based on the SOFR plus the margin, the increase in that 8th year can be as high as 5% over your start rate. That's huge, right? And then after that 8th year, in the, or I'm sorry, I shouldn't say the 8th year, the first adjustment in beginning of year 8, the adjustment is going to occur. If there's an increase required, it's going to be capped at up to a 5% increase, which is substantial. And then it's going to adjust again in 6 more months. And then those adjustments starting after that year 8, first 6 months, then every 6-month interval after that, it is a 1% adjustment cap. And you do still have the same 5% life cap. Although, again, conventional arms typically are going to start more like the higher 5s and the 6s. So your life cap's probably going to be 11% plus. Now, here's the key difference with the FHA 5/1 ARM and why I think it's a huge opportunity for those borrowers who need a FHA loan, whether it be for qualifying purposes or maybe as a rate play. The conventional the FHA 5/1 ARM qualifies at the start rate, at the note rate. That is not the case with a conventional ARM loan. With a conventional ARM loan, you're not going to qualify at the start rate. You're going to qualify at the fully indexed rate. That means the index plus margin, or the note rate plus 2%, whichever is higher, except if you take a 7/6 or a 10/6 ARM, which of course those have a higher start rate than a 5/6 ARM. So that's a key difference. That's why if I'm talking to an FHA buyer and we're quoting them, 6%, 5 7/8, and we're running into a debt ratio problem, a 5/1 ARM can be very helpful because we do get to qualify at that lower start rate. And if the lower start rate is, say, 5 1/8 versus a 30-year fixed FHA at 6, that can make a very significant difference in the borrower's ability to qualify. So I just want to bring this to people's attention that the 5/1 ARM right now is a great opportunity from a rate perspective. And so I'm spending more time now when I'm pre-qualifying buyers who need FHA or want FHA, bring this to their attention so they understand the rate opportunity. Now, an ARM loan, of course, has some risks involved. What happens to your rate and payment when the adjustments start after that 5-year period? What I would say to that is a couple of things. Number one, in a lot of cases, the 5/1 ARM or any conventional or FHA ARM is going to work best or be suited best for a borrower who maybe has a pretty good idea they're not going to need the loan or keep the loan or the house beyond that fixed period. But even if they choose to keep it past that fixed period, you want to understand that these loans are not designed to automatically go up. They can go down. And we have seen in certain environments, like earlier in this decade, the 2020, 2021, those who had hung on to ARM loans that they got maybe 5 or 6 or 8 years before that actually saw their rates drop because of rates in general falling. So again, I want to bring this to everyone's attention. The 5/1 ARM is becoming, I think, a very good product alternative to look at if you're rate sensitive and if you need it for qualifying purposes. So if you have any questions about this product, if you'd like to get a worksheet on this product, contact me. I'd be happy to put some numbers together for you and get them to you so you can evaluate this along with your other mortgage program options to consider, especially if you're buying a home.